Welcome back to the Decarb Connect podcast, and thank you to Nico Girod, who's joining me today to talk about really what is a quite a big evolution of the voluntary offsets market. But before we get to that, let me give just a very light intro, and then I'm going to ask Nico to explain a little more about his background and also the work of Clear Blue Markets. So Nico, you were actually one of the founding partners, I see, of Clear Blue Markets, and you're managing director of markets. So if you could just talk to us a bit about how did the business come to form? You came at it from a background in energy trading. So, what's the kind of goal of the business? And then we're talking about voluntary offsets. So how does it feed into that as well?
Perfect. Yeah, thanks for the invitation, Alex. So I co-founded Clear Blue Market 6 years ago, and as you mentioned, Alex, we've been working, I would say, for to my partners, Michael and Michael, in the carbon offset world since the early 2000s. We've held different positions for offset developers, but also for banks and for energy traders. And yeah, that gave us a lot of experience in all those markets. However, what happened is 6 years ago, carbon markets were really at the lows. Prices were very low, like there weren't any incentive to produce new offsets or work on new projects. And at that point, we saw that there was a new cap and trade, so a regulatory market starting in Ontario in Canada. And that was a good thing because one of my two partners, Michael, is Canadian, and at that point decided to come back to Toronto. And myself actually moved to New York. Michael stayed in Amsterdam. But at that point, we started Clear Blue Markets, and the goal originally was to help large emitters in Ontario to understand this new market coming and how they could optimize their position and trade their position. So that's really what we started doing. One of our first clients was a large regulated entity that needed to hire experts to create a compliance plan, and that's how it all started. And from there, we started working with most of the large emitting sectors, from steel to cement, chemical, etc. You name it, all the large emitters and all the industry that there is in Ontario. And from there, yeah, we started working across North America, in California, in Quebec, and across Canada and the US, helping really large emitters manage these compliance positions. That was the first thing. And then I would say 2 years ago, there was a lot of uncertainty in the Canadian market, with new governments coming in and out and changing the rules. And what we saw is we started seeing as well large corporates coming to us, or some of our clients that were in regulatory markets, and starting to ask more about voluntary markets. And so that's really how we really started working more on the voluntary offset market, just really because of demand from clients. And of course, our deep background in offset development and trading also helped a lot. So that's really how we came to start as Clear Blue as a company.
And then as the company has grown, like how's the kind of the balance of the work shifted? So if you think about 6 years ago when you launched to now, like what proportion of your time or advisory work is focused on voluntary versus regulated markets, would you guesstimate?
Yeah, I think the first thing that we noticed is when we started 6 years ago, we really had to push our services and explain clients why it was so important to look at those carbon regulatory markets and how it would impact them, because they didn't not realize really that was coming and that was important. So that was really the first shift I think we've seen in the past 2 years, is that it's really shifted from us pushing services to clients to really clients coming to us, because now they realize that carbon pricing is here to stay. And so it's an important part of their business. And so like this, at the same time, it started a lot as well. When we were working with clients, we would talk to people in the environmental department, but now it's becoming more and more of a financial issue. So there's also been a shift there. And then on your question on compliance versus voluntary, when we started, it was really 100% compliance. And today I would say it's still 60% compliance, 40% voluntary, but definitively like the new clients, the new interest is coming from the voluntary side.
If you could just kick off with a little bit of an introduction to carbon offsets, the difference between removal versus reduction offsets, and your lens on the growth of the last 2 or 3 years.
Perfect. So I think the first thing to clarify is why are corporates using carbon offsets, or companies are looking at carbon offsets. There's a lot of different reasons, but I would say overall yeah, it either is because of customer demand or because of investor demand. So there's a lot of different reasons why they would want to use offsets. And then what is an offset? It's really has to be like a project that reduces emissions. So it's a credit related to a project that reduces emissions. And then we see two main type of offsets, either removal. So mostly when you talk about removal, you're talking about projects, for example, for forestry projects, so reforestation or avoided deforestation type of project. And then when you look at reduction offsets, you're talking more about renewable energy, for example, in different countries. So solar or wind projects. Of course, that has to be in markets where there isn't a current regulatory market to make sure that these projects are additional. So I would say that's the main like type of credits we see today.
Is there a way of quantifying either the kind of volume of offsets being bought?
There is data. We can see a lot of information in the main registries. So yeah, also something important to mention on offset is historically it was really about reduction type of offsets. So really like trying to incentivize more renewable energy. But as it went, we started seeing, I would say, in the past few years, more and more forestry type of projects that has been pushed a lot by oil companies, for example. So yeah, we've seen a shift here. And in terms of demand as well, last year in 2020, the total retirement in the main registries that we track was around 100 million credits. And that has been growing steadily, I would say, in the past few years since 2016 by 30 to 40% a year. So that's one thing is the retirements. But at the same time, we're also seeing that the issuances are increasing even faster because the market is expecting that the demand is going to increase in the coming years. But we're also seeing, as I mentioned, oil companies have really increased their activity. And they also tend to hold quite important inventories of credit. So that's also adding a lot to the demand at the moment.
Anytime in any kind of market, there's increasing activity. There's an impact on both product, there's an impact on participants. But talk to me a bit about what's been the impact of that increasing activity.
So on oil and gas, yeah, like maybe again, like a couple of years ago, 4 or 5 years ago, we started seeing companies like Shell or BP offering offsets to their clients, so really retail clients at the pump buying offsets. That started as I would say a small business. We also saw aviation companies offering that as an option for customers. But that has really gathered a lot of pace or accelerated in the past year since COVID, where we're really seeing that these products are being pushed more and more. And I think there's also been a realization that like the businesses need to be sustainable, and a way to do that is to invest in offset projects as well.
We did a podcast recently with a new trading exchange, Abax, which is launching soon, and Joe Raya from there was talking about the kind of growing interest from commodities traders in offsets. Again, what's that about, and what are you seeing there?
That's been really like one of the main trends in 2021 so far. So commodities traders, have been like more and more involved. I think what we've seen a lot at the start were LNG shipments sold in Asia bundled with offsets. So we've seen a few announcements out there from companies such as Shell or Total who were buying selling those LNG shipments with offsets to buyers such as Tokyo Gas or CNOOC in China. So a lot of the demand seemed to be coming from Asia. But more generally, I would say in the commodity sector, we've also seen crude oil being sold with offsets. We've seen bunker fuel sold with offsets, naphtha as well. So it is becoming, it started with LNG, but it's becoming more and more a common thing. And we're hearing more and more traders wanting to offer whatever products they offer with offsets. So we've heard also the metal sector more and more is looking into offsets. So yeah, it's really a trend for all those type of traders to being able to offer offsets, and that is really one of the big things that has added demand this year. And on top of that, I would say, yeah, those traders also see the demand increasing, and they've also been setting up new desks. So yeah, a lot of those new traders, like for example, Vitol or Trafigura, have been out there announcing that they were increasing their presence in those markets and hiring more people. So that's also, again, adding to the demand, and yeah, just this impression that really the market is growing a lot, and that the expectation is that it's going to continue as well.
Okay, so in terms of the volume, big shifts happening in terms of people getting involved, some kind of new distinct groups actually stepping into these markets. Are the products themselves maturing? What are you seeing change there?
Yeah, so I mean, yeah, people often point to the fact that it's a bit of a wild west in the voluntary market. But if you really start looking into it, yeah, there are trends that are emerging as well, and some standardization. So yeah, while in the past people could easily use credits with very old vintages, you're seeing less and less of that, for example, or the type of projects as well. Like again, if you look at all these LNG shipments that were sold in Asia and what offsets they used, at the start they were using a lot of cheaper, lower quality offsets. So for example, renewable energy projects in Asia, these tends to be a lot of these cheaper volumes out there. You were seeing a lot less and less of those credits being used, but more higher value credits with co-benefits around it. So oftentimes you're talking about forestry type of projects with like some yeah, other certification for helping the biodiversity, helping local like communities. So there's been a shift as well to the quality and higher quality of credits, but at the same time, yeah, you don't really see always a willingness from buyers to pay a price that is too high. And so there's also compromise here that needs to be done between the price that buyers are ready to pay and what the market can offer them, and at what price as well. So I think that eventually that's kind of the issue we're seeing now, is prices are going up because the demand is going up, but we don't always see buyers increasing the level at which they want to buy those credits.
So when a heavy emitter is coming to you and talking about this, what are the classic questions that they bring to you? What are they concerned about? What are they most often asking?
So I mean, yeah, most of the clients that come to us, the first question they would have is, yeah, what can we buy, and what is there available? So we'll guide them and explain them what is available. So what type of credits? I mentioned renewable energy, mentioned forestry projects. So what is available and where are they available? And then what prices? I mentioned prices can go from 50 cents to 10, 20, $30 a ton. So that is again an important factor on, yeah, what price are they ready to pay. And then geography as well, like a credit in the US is going to be more expensive than a project credit in South America, for example, or in Asia. So there's also a lot of these different factors. So we'll help them understand all those factors, what impacts prices, why credits are more expensive than others, and what can they claim with it as well. So it's also a lot of the work we do is the communication around using those offsets, retiring those offsets. So that's a lot of what we do for clients. And then, yeah, the reputation risk. So that's also always a thing where those companies want to do the right thing and they don't get attacked for it, and they're spending money for it. So it's important for them to make sure that they use reputable credits and that they're not going to get attacked for it in a few years' time. So that's really what we do as well with all the due diligence we do on projects and helping clients understand where there is more risk or less risks, for example. So yeah, very like the typical example here is the avoided deforestation type of project. Oftentimes there is quite some yeah, like bad press about it. Like recently there was bad press about projects in Colombia. So yeah, these are projects that can be more risky because of the way like the baselines are calculated, or like this type of factors we'll take into account to help our clients choose the offsets and what price they can pay as well.
What in your mind is like the gold star of quality offsets?
I don't think there's one gold star, but I think you're seeing trends, and yeah, typically projects we would tend to recommend would be projects like afforestation type of projects. So really planting new trees in like lands where there were no trees before, so you don't have this problem of baseline. And then, yeah, the location at the end doesn't really matter, but these are like the type of projects and making sure, yeah, that local communities are being like supported as well. So there's like all those co-benefits, but at the end of the day, it's about impact on climate, I would say. So you want to make sure that there is a a quantifiable and a permanent impact on the CO2. That's the most important thing for us.
Definitely in the press, there's been plenty of sort of stories and reporting about the extent to which voluntary offsets can be a sort of, I guess, a way of deflecting the harder work of decarbonisation. What's your lens on that? Where are those kind of criticisms valid and things you need to work with, and what feels like maybe more peripheral?
I mean, from what we see, generally speaking, is that buyers or companies that want to buy offsets, they normally don't decide that from one day to another just to really purely greenwash. It's really something that is thought out in a strategy. So oftentimes, yeah, we always say that, but like most companies that come to us already thought about how can I invest in my industry or my factory to reduce emissions. That's what makes most sense for company, because if they're going to invest money, they rather invest it in their own operations than outside. So we like often hear that a lot. So most clients are looking at their ways to reduce emissions, but then they are looking at offsets to have an additional impact. That's really how and why they're looking at offsets and why you should use offsets. It's really not an exercise of just offsetting your emissions and that's it. It should be about, I want to go to carbon neutrality as a company by whatever, 2030 or 2050, because I want to have a sustainable business. But in the transition, I will be using offsets, because if you're talking to steel mills or cement producers or even the shipping sector, yeah, those are like long investment cycles. It takes a lot of time to reduce emissions. Oftentimes, they don't have the regulatory certainty that they need to invest. So there are a lot of issues for them to reduce emissions. There are ways to reduce emissions, but it's also very expensive and very risky. So one way to, yeah, like have a positive impact in the transition is really to use offsets. And I think it's also an issue of the regulator in general, is that they don't give enough certainty for people to invest and reduce their emissions. So it's, yeah, like offsets are really there because of the regulator at the end of the day, because like not enough is being made to help yeah, emitters reduce their emissions in a sustainable way.
What would be your gut feel? What's your guidance? How should we be using offsets on this kind of timeline to net zero?
I think, yeah, we also do as a company a lot of modeling on supply and demand for offsets and other markets, but we've looked at the voluntary market, and there's a lot of assumptions behind it. But generally, when we look at large industries and how they plan to reduce emissions, they normally have yeah, the cycle of 10, 15, 20 years before they can really start reducing emissions. And so the way we see it is that we think that there's going to likely be a lot of demand for offsets up to 2030, 2035. But by then, hopefully, with more certainty on how we can reduce emissions, etc., there'll be more and more emissions being reduced and less offsets being used as well. So again, it's really a transition thing. We think that demand will peak around 2035. We don't think that demand is just going to go up all the way, because we see that as a transition tool and not just as a final tool, I would say.
I think it's interesting to think that the peak point being 2035, but also that these voluntary offsets are an expression of what is not available to people from a policy or a regulated environment. I'm sure that probably seems quite obvious to people in the market, but to me, it's not a perspective I'd seen on that. And I think that's an interesting thing for the hecklers and the people that are criticizing it also to keep in mind, is that this is a market that exists because other support transition simply isn't there yet.
Yeah. And I mean, I would say on critics, we often see, yeah, critics about these Colombian offsets recently. There were a lot of critics on California offsets, and they tend to like look always at the same issues. But yeah, like most times, I mean, there's always like the main standards that come back with comments and explanation. And oftentimes, yeah, those critics are not always right, I have to say. And certainly there were bad projects out there, but there were like a lot of good projects as well. So like just focusing all this time and energy on 1% or less than 1% of the projects that may not be so good, while most of the other ones are good. Yeah, we kind of, I think it's, yeah, of course it can always be better, but yeah, if you look at what offsets were 10 years ago, 15 years ago, 20 years ago, yeah, we've improved like these projects have improved a lot. The quality of those projects have improved a lot, and it's will continuously improve. And it's good that people look at those bad projects or pinpoint things that are not so good, so things improve. But we should also like just, I think, focus as well on the good projects and like all the good things that are being made thanks to those offset projects.
You've mentioned a bit about when you're expecting to see peak offset, but what other kind of price change or product change, or what else are you expecting to see emerge?
So I think there'll be more standardization. There is already more and more standardization. For example, a lot of companies are using like the Corsia type of offset. So these are like just essentially some criteria to filter from all the offsets available to certain quality. So you'll probably see like continuously like this type of trend. So there might be like specific criteria for 4C type of projects or removal type of projects. You might start seeing more and more credits for technological removal rather than natural-based removal. So that as it goes, I think there's going to be a focus on quality. But at the same time, by 2050, there should likely only be removal, because by then, hopefully, emissions will be reduced as much as they can. So there'll also be a switch here. So from today, where we still do need a lot of emission reductions offsets, I believe, to a market where the focus will be more on removal. So today, I think that both are very useful, and some part of the markets are really pushing on the removal side, but I do think that there's a market for both type of offsets. But as it goes, there might be more and more removal type of credits. And then, in terms of standardization, you might start seeing as well more exchanges. I mean, there are a lot of exchanges already opening new exchanges that could help the liquidity and help the trading of those type of offsets. That could be good for the market, generally speaking.
Thank you so much, Nico. And to anyone listening, I will ask Nico after this for relevant links to some of the work that Clear Blue are doing, so that you can get in touch with him as well. But thanks, Nico.
Thanks, Alex.